All right, everybody. Thank you for being with us this week again. My name is Tony Alvarez from Keller Williams Hoover, and I'm today again with my good friend Andy from Gagliano Mortgage. Andy, how you doing today?
I am well, Tony. How are you, sir?
So far, so good. Enjoying this beautiful day. We kind of like getting into full spring now. It's been
Oh
chilly a
yeah.
couple of days, but now it's perfect outside.
Yes, indeed. Yeah, I took a little trip last week and you know, this time of year you leave for a week and you come back and it's like a completely different world. The
Exactly.
trees are fully leafed out, everything's just full blown bloom. It is gorgeous.
That's Alabama for you. That's
Yes.
Alabama for you.
Yeah.
Andy, I have a couple questions. I have an agent here in the office that he was telling us she represent the buyer and they make an offer on the property, got accepted, uh, but they receive a notification today from the mortgage guy, from the loan officer, that the appraisal came $10,000 less than the
Mhm.
asking price and the offer price. And the same loan officer was telling her that they've been seeing some of the appraisals coming low lately. Have you seen something like that lately? Have you noticed anything going on with the prices there?
That is a very good and valid question, and I'm probably about to make the quality of the video a little bit less here because I'm going to knock on wood. So if you see the camera shaking, that's why. I have not. I've not had any issues with any of that. And I will say this, the appraisal I ordered last week, the one I ordered yesterday, either of those could come back in. The one I've got to order as soon as you and I get off this call, any of those could come back in low. And, this could be something that we start to see more and more of. But I haven't had any issues. I just wonder, you know, ordering appraisals right now is a really tricky thing in the mortgage industry. And it's not just right now, something's been going on for several years now because we loan officers no longer have control over which appraisers get our appraisal orders. And a lot of times those orders have to go to a national appraisal management company and they could send in an appraiser from Gadsden into Birmingham or Montgomery into Birmingham to do an appraisal. Well, those appraisers are not real familiar with our market because we've talked about this before in these very videos, talking about the Birmingham market. The Homewood market is not like the Alabaster market, which is not like the Hoover market, which is not like the Springville market. So you can't really say the Birmingham real estate market because it's so vastly different from this municipality to this municipality to this one to this one to this one. And so when you bring an appraiser from outside of the Birmingham area who's not familiar with all of the intricacies and the differences in these individual markets around the Birmingham metro area, sometimes you can see issues with appraisals. And again, maybe I've just been blessed here lately that I've not had any issues, and this is something that is becoming more common, but as of right now, I've not been having any issues with that, and I'm very thankful for that because it creates a lot of stress for the buyer, it creates a lot of stress for the seller, and both real estate agents. It's just another, at that point, for anyone who's watching who's not familiar with what happens when a property does not appraise for the sales price, at that point in time, the price is essentially, it can be essentially up for renegotiation. So there's four things that can happen. Number one, the buyer can walk away. Now, there's a
Right.
really good chance that's not what anybody wants. So let's move on to thing number two. Number two, the buyer can ask the seller to come down in price to what the house appraised for. Number three, once the buyer asks the seller to do that, the seller can say, hey, go jump in a lake. I'm not coming down in price at all. You're going to have to pay cash to get from where the house appraised to my sales price.
Yeah,
So
and I don't think we are on the third option yet. That was probably a couple years ago, but right
that
now
was
the third option is I don't think apply.
That's right. That was a few years ago. Option four, which is something we do see a good bit of, is a compromise, where the seller says, in this example, you gave of $10,000. Maybe the seller says, hey, I can't come down $10,000 in price, but I can come down 5,000 in price. Can you find an additional $5,000 in cash to make up the difference between what would be the new sales price and the appraised value? And so that's something we see a lot. Also, we see the seller coming down in price to what the house appraised for a lot as well, more so
Yeah,
than the buyer going up, like we spoke about. So,
yeah, and that's something important that you just mentioned. Is options. There's always options for everything in real estate. Nothing is being written in stone. We
very
always have
true.
options. We can always negotiate, and at the end of the day, we just if the deal doesn't go through, unfortunately, it doesn't go through. That's
Right. Yeah.
nothing else we can do. We can try to make it work for everybody, but at the end of the day, it's seller decision and it's the buyer decision, and we
Yeah.
cannot make them meet in the middle or coming into an agreement. It's just that would be the unfortunate result. Uh,
Yeah. And, that's another thing I'll throw out there is that's where having a great real estate agent like you, Tony, who can say, hey, when you're writing that offer for that buyer to say, hey, do you want to make your offer contingent on the appraisal? Here's what will happen if you don't. Here's what can happen if you do, and just to walk the buyers through all those processes, and just and explain to them that if that contract is contingent on the appraisal, that if they can't come to an agreement with the seller, they can do a mutual release and get their earnest money back, and they can move on. And
that's correct.
so having a professional, especially in these days and times in the real estate market, is really, really important.
Yeah, it is very important and very essential, that somebody that knows what is doing, somebody that, will is doing this. There's many agents that we're doing this not for the money. We're doing it to help people. We're doing it, to put people homes, help them to the American dream, home ownership dream, whatever you want to call it.
Yeah.
There is a lot great, amazing agents, and buyers need real estate agents to represent them. Sellers need real estate agents to represent them. That I don't think ever going to go away.
Yeah.
Another thing, out of curiosity, I want to ask you about HELOCs. What is
Okay.
the difference between a HELOC and refinancing?
You're asking great questions today, which is not unusual. That's not unlike you at all. So, a HELOC is short for a home equity line of credit, HELOC, home equity line of credit. And the way a HELOC works, the easiest way I know to describe a HELOC so that 95% of the people watching this will understand it just like that, is to say, imagine a credit card that's attached to your home, to where you got a maximum credit limit. Let's say it's $100,000. The equity in your home secures that line of credit. So that's why the lender or the bank is willing to give you a line of credit that's that high of $100,000, because they know they've got your home to back it up, the fact that you're going to pay for it. And you can treat that line of credit just like you do a credit card. You can use it to purchase something. Maybe that's a car. Maybe it's remodeling a bathroom or a kitchen. And once you use that line of credit, you've charged up that line So the balance is high on it and you start making payments on it. And as you pay that balance down, you've now got the opportunity to come back in and charge again on it, to charge it back up. And you pay it down and pay it down and you can charge again. And so that is how a line of credit works. And this line of credit is attached to the equity in the home.
Now, let me ask you this. There is any restrictions that they can use that line of credit for?
So I'm going to say yes.
Okay.
The I liken a line of credit to the wild, wild west, because it's not like a typical conventional FHA, VA, USDA loan where there are set guidelines and every lender out there plays by those rules. Now, those lenders can make rules on top of the rules, but we've got that flat line set of rules with those loans, and that's how that works. With a home equity line of credit, there's a lot of flexibility, because let's say Bank A says, well, we're going to loan someone up to 80% of the equity that they have in their home. I'm going to throw an example out there because this can sometimes throw people a little curveball. And I'm going to go back in time too. I'm going to go back in time 20 years. So let's say somebody's home is worth $100,000. All right. So the Bank A says we'll loan up to 80% of the value of that home, or 80% of $100,000 is $80,000 minus what that person owes on a first mortgage if they have one. So let's say that person has a $50,000 first mortgage. Well, then 80,000 minus 50,000, that leaves them $30,000 available to borrow on that line of credit. So that's how those numbers work out. But Bank A may say, we'll loan someone up to 80%. Bank B may say, we'll loan someone up to 90%.
Mm-hmm.
Bank A may say, we have a minimum credit score of 660. And Bank B may say, we have a minimum credit score of 700, because if we're going to go to a 90%, we want that person to have better credit. So each bank sets their own guidelines and criteria for these home equity lines of credit. And that's why it's extremely important for anyone who wants a line of credit or thinks they may want to learn more about a line of credit to shop around. And, I have people that previous clients that call me from time to time and say, hey, I'm thinking of getting a home equity line of credit. Do you do those? Well, the short answer is yes. The longer answer is, but I may not be the best out there. Let's talk about your situation. I will never claim to know what every bank does as far as a line of credit, what their terms are, because it's impossible for me to know that.
Correct.
These things change all the time. Their guidelines change all the time, and I just can't keep up with all that. But I have about 5 different banks, local banks here in the Birmingham metro area, that I will contact when a client comes to me and says, hey, I think I want to get a line of credit. I'll call them and I'll find out what their terms are on their line of credit and compare that with what I have. And then from there, I'll make a recommendation of, hey, John Doe, Bank A has a better deal for you than I can give you, or any of these other 4 banks can give you. I recommend you contact this person at Bank A
Perfect.
and kind of go from there.
Now, when it comes to interest rate, what the interest rate they usually handle? I mean, I know it's different from one client to another. Each case is
Yeah.
different, but to have an idea, more or less.
Yeah. So the base rate for a home equity line of credit is prime rate. And today, you and I are recording this, it is April the 23rd. Prime rate today is 8.5%.
Yeah.
And based on someone's credit, the bank may offer prime minus something, 1%, a 0.5%, or the bank may offer prime plus something, a 0.5%, 1%, 2%, whatever that may be.
Yeah.
And
Let's
so,
remember that, it has to do also with the credit score and the guidelines, like you were talking before.
correct. That's
So
correct.
that's great. Now, I haven't seen it, and I'm not sure if it's still happening. But I remember something that got us in a lot of trouble back in 2008, 2007. A lot of people wasn't doing HELOCs because there was not enough equity in the property, but
Right.
they were doing refinance, cash out refinance. Have you seen any cash out refinance lately? And it is it is better probably a HELOC than a refinance, a cash refinance.
Yeah. So, it's another one of those things that really just depends on the situation. We've been doing refinances, believe it or not, and refinancing people from interest rates that are 3% on a 30-year fixed and taking them up to an interest rate at today's rate of, 7 to 7.5,
Yeah.
because people are, a lot of people are in a tough position financially right now. The cost of everything has gone up. I honestly cannot think of the cost of one single item that has gone down in value or gone down in cost over the past 3 to 4 years. Not one. And because the cost of things have gone up, people are using their credit cards more, and they're having to use their cash, more of their take home pay,
Yeah.
to buy groceries and medication and pay electricity and gasoline. All these things have gone up. And so what some of us may consider to be luxury items, like a vacation, is
Yes.
totally a luxury item, but it's something that we need also to recharge and motivate. You know, those those things get put on credit cards typically, and they don't get paid off very quickly. So we're seeing credit card debt rise nationally to an all-time high. And so it can make a lot of sense for someone to get out of that 3% 30-year fixed rate mortgage, combine some debt into the equity, or into their current mortgage, I should say, pull out the equity in their home, pay all that off, pay off the existing mortgage, the credit card debt, any high interest rate car loans, student loans. We're paying off some of those because the interest rates on those have gone up as well over the past couple of years. And so what we end up seeing, and I actually am working on one right now, this couple is going to save about $1,800 per month in cash flow by refinancing their mortgage that's at a 3% interest rate and taking it to a 7% interest rate, and getting
Wow.
rid of all of their consumer debt. Now, there's there's a catch with this, and I want to be very matter of fact and very sincere about this,
Yes.
because the catch to this is, and I'm going to look dead at the lens of the camera when I say this, when those debts are paid off, if it's you we're doing the refinance for, please, please, please do not charge those credit cards back up. And don't go out and buy a new boat. And don't go out and do these things that got you in that position to where you had all that consumer debt to start with, because now you've just taken a chunk of your home equity and used it to pay your debt off, which can be a very, very smart financial move if that couple that I told you about will take the vast majority of that $1,800 in consumer debt they're paying off and apply that towards principal reduction on the new loan, now they're building the equity back up in that home quicker. They're paying off a higher interest rate mortgage quicker. And what they're doing, without getting too terribly technical, is they're lowering the effective interest rate on that mortgage from 7.5, whatever it happens to be, down to somewhere in the low sixes or high fives, because they're prepaying the interest on that mortgage by paying the equity on it, or
You know,
paying
it payoffs to consult with professionals. You know,
it
I'm
does.
pretty sure that this is something that this couple came to you, told you their situation, and you sit down with them and create a plan and
Yeah,
make a plan. This is what we can do, and at the end of the day, this is how much you're going to be saving. This is how much cash flow you're going to be having, and create the ideas. And you know, luckily they listen to you, and they're following all the steps that you are recommended.
yeah,
And that definitely makes sense. You know, changing all that. So personally, I think that before you decide if you want to refinance, cash out, or do a HELOC, talk to a mortgage professional first. Be honest with the situation that you're in so they can create a plan. And who better than Andy to talk to about it? Because, you know, I can tell you, Andy is not going to make you force you to do anything you don't want to do. And like he said, you know, if he is not the best option for you, he is going to tell you he is
yeah,
not. You know,
yeah,
we're in the business to helping people. We're not in the business to take advantage of people, and that's what I like to talk to Andy all this time. And I really trust him on that matter. You know,
yeah,
that's what we're trying to do over here. So, to recap real quick, HELOC is like a credit card that you have using the equity of your home. You pay for what you use. If you have a credit line of $50,000 and you only use 10,000, your payment is based on the 10,000, and you still got the other 40,000 sitting there to use for an emergency or anything. Even you might think probably use some of that money to use a down payment to buy a investment property.
true.
Who knows? And you got the refinance it, you know, and before you refinance and you say, and I have a 3%, 3.5% interest rate, if refinance right now, I'm going to get 7.5. It sounds like it's a lot, but probably like in the example that Andy gave us, it's going to be better on the long run for you guys.
Yeah.
So, Andy, if people want to talk to you about HELOCs, refinance, cash out, and all those mortgage plans and how to help and get out of debt and things of all that money wise, how can they contact you?
Yes, that they can call me at 205-979-4412. I'm at extension 1. And I'll throw one other really great use for a HELOC out there very quickly. When someone says, "Hey, I want to sell my home in the next 6 months or 12 months," and Tony comes out and looks at your house and says, "You got a beautiful house. You could get top dollar if you'll redo these two things in your kitchen, or redo this bathroom, or maybe put some new carpet in, but you just don't have the cash to do it." I bet you do. I bet it's in the equity of your home. And a home equity line of credit can get you top dollar for your home if you use it that way.
Definitely, that's a great idea. You use a HELOC, a line of credit on the equity of your home to do the improvements of the house. That way you get more money out of it. So that's a
Right.
small investments you're gonna make, and you're gonna recoup all the money right away. That is fantastic. Definitely a great idea. So you hear, see guys, you need to talk to a professional. So you want to sell your house, you want to buy a home, just give me a call. Tony Alvarez, 205-370-3248. Kelly Williams Hoover and Andy. Thank you again for being with us today, and I'll see you next time.
Thank you, Tony. Have a great day.
You too. Bye bye,
Bye-bye.
guys.
Goodbye.